Jake, I want to switch tack slightly. You mentioned towards the start of the episode here, you've got quite the background in the energy business. And I kind of want to talk to you about what Buffett's been doing in that space and kind of maybe energy more generally and what's kind of been going on there. We've seen, Buffett buy a whole bunch of Oxy and Chevron, and
Yeah.
oil's been super volatile, as of a bunch of other kind of energy commodities and things. What's kind of take on Buffett's recent purchases in that industry?
Yeah, I mean, I should preface the whole conversation that my background was electricity specifically.
Mm-hmm.
So, and I did an internship in college that was actually around natural gas. But otherwise, like there's are billions of people who know more about the oil industry than me, most likely. So, but I will say that I can really only speak. I don't know exactly what Buffett is thinking, but like I know personally for me, back in 2020, oil prices were negative. People were filling their swimming pools up with oil because there was nowhere to put it. And there was all this ESG baggage around oil and energy. And they couldn't get capital. Like there was all of these reasons to hate energy and a slowing economy too. Like we stopped the economy. Like that's literally, we're not burning as many hydrocarbons. But I found it incredibly easy to buy energy stocks at that point. And the reason being was that there's all the market psychology part of it, which we just talked about, like why it would be so negative with the ESG and, like negative prices. And all these companies had been burning capital for numbers of years at that point. But that is exactly the situation that leads to less competition, leads to higher prices eventually, leads to higher returns on equity for those type of businesses. And so, I mean, that's what you should really be looking for. Like that's the blood in the streets. And when I, but like the key differentiation is that you have to know that it's not an obsolescent product or industry. Like this wasn't wagon wheels in 19. So, and how did I get comfortable with that part? Well, just the sheer physics, like that our part I did enough research on to understand like how much of the world is dependent upon hydrocarbons. Our modern world runs on hydrocarbons. I mean, we are uh, it's shocking if you actually dig into some of the work by like Vlakov Smil has done a lot of this. He's a professor that is also, he writes really prolifically, and this is Bill Gates' favorite author. But he's written entire books about energy, and if you read them, you're like, oh my God, it's going to take so long for us to get off of energy. Like there's no way we're getting off of hydrocarbons anytime soon. So I felt very comfortable that we were not getting off anytime soon, and therefore I could buy comfortably when there was blood in the streets and when the sentiment was so negative. Now today it's a little bit harder because the price has gone up a lot. Obviously, we're still not like back up to 2008 highs. Like 2008, we got over 150 per barrel. We got over. We ran up over 100, and now we're back down below that now. But those companies are earning reasonable returns on equity today. They're reasonably profitable. They're still reasonably cheap in that I think the market is saying we don't believe that this is going to be sustainable. We think that either oil prices are going to come back down, or that you guys are going to get stupid and spend a bunch of capex and start competing with each other again like you used to. And they're probably right over a long enough timeline. Just the question is, like, the bet that you have to get clear in your mind with this now is how long does it take for that rationality, a really irrationality in cooperation between them and not expending a bunch of capex. How long can that go on? How long can good returns on equity last? You take a company like Chevron, even, you look at last time that oil was kind of working, that was 2011 ish. They, at that point, were earning 25 to 30% returns on equity and getting 3 times price to book for the company. That's still a ways away from where we are today. I'm not saying that you should always wait to get peak earnings, peak valuation, but I don't know. Like, I think Buffett recognizes the capital allocation specifically at Oxy, and the fact that the free cash flow is not going to be going back into more capex. It's going to be going to buybacks, and so he's just picturing he's just going to own an increasing amount of this company if he just does nothing from here. So that's kind of my general take. I may or may not be that helpful, but there's everyone has to kind of make their own decisions, and it's not investment advice, I should say.
Yeah, for sure. No, that is helpful. Yeah, I mean the handful of different oil company conference calls I've kind of listened through over the past few quarters, the theme is like unbelievably consistent across the board of we're going to spend a little bit on capex but next to nothing, and we're just going to buy back stock and pay dividends or repay debt. And to an extent, I think that probably reinforces the idea of oil prices might sustain at higher levels for a longer period of time because no one's going out and looking for oil anymore. I think you might have said on the Value After Hours podcast maybe a week or so ago, it seems like their treadmill's kind of running at max speed in terms of oil supply. Like there's not a lot of latent supply that could come online out there. Could you speak to that a little?
My understanding, is that we are not making the big finds of deposits that we did at one point. Like it requires increasingly Herculean engineering efforts to find similar amounts of oil. So, in the 1940s, there were a couple like huge finds, Saudi Arabia, in the U.S. as well, that were just like, oh my God, like we're floating in oil now as a species. I think that's not quite as true. And I think there's still tremendous amounts of oil, coal, natural gas, all the things that are sort of prerequisites for the modern society. But we have to do more work to find them and to get them. They're more dispersed. And therefore, it just means it's going to be more expensive. Like the search costs are higher. And if that's the case, then the price of it should probably expect it to be somewhat higher. You never run out of anything. It's just it becomes uneconomic to chase after it anymore at some point. So, I don't know. I mean, it's a little bit scary in some ways. Like I'm very hopeful that humanity will make the transition from hydrocarbons to more renewable sources of energy. And I think we will get there eventually. I just think it's going to take a long time. And as an investor, if everyone thinks it's going to take a short time and you think it's going to take longer, that has often been a pretty good bet to make, is that things take longer than everyone thinks.
Yeah, I mean, even with all the sustainability initiatives going on in all parts of the world, I don't have the numbers in front of me at the moment, but it seems like oil demand kind of continues to truck upwards at maybe a couple of percent a year, something like that.
Well, one of the tough things about this whole thing, if we try to be like equitable as a species, is that there are a couple billion people on planet Earth right now who are not living their like kind of quote unquote best life because they're way down on the energy consumption curve. And at the end of the day, like that energy is what drives how easy life is for you. Like I'll give you a couple of numbers on this, like that I've looked up. So if you imagine that, like the average inhabitant on Earth today has at their disposal 700 times more useful energy than their ancestors did in 1800. Okay, so what is that? It's actually like 34 gigajoules per capita is what it is. And so what does that actually mean? Like, what's that look like for us? That's the physical equivalent of the like physical labor of 60 adults working nonstop for every single person on Earth today. And they're working night and day. Basically, like if you had a team of 60 people that were just working night and day for you to create your modern life, like this is what it would take. And, if you stripped out all of the hydrocarbons. Now, if you live in an affluent country, it's more like 200 to 250 adults who are working for you nonstop. And that's what it's providing for us. So, that's really hard to undo something like that. And I think it's just going to take a really long time. And if we, as like probably if you're listening to this podcast, you're probably in the upper half of humanity as far as like how much energy you get to use. It feels a little bit unfair to me and kind of kind of rough that we are wanting to pull up the ladder into the tree fort, and all these other, couple million people are not in the tree fort of high energy and high quality life, and we're doing it for environmental reasons. And I think the environmental reasons are totally noble, and I believe that we do need to solve this problem. It's just if you always have to ask yourself in economics, and then what? And so you ask any question like, here's what we're going to do. Okay, well, and then what? And one of the and then what's of if we tried to get off of hydrocarbons too fast is that you are basically banishing a couple billion people to a very pretty rough life at that point. So that doesn't feel very good to me as a member of this species. And so I think we just have to be a little bit more cognizant of the physics of it, even if we all have good intentions when we show up.
Yeah, completely agree. Maybe one last question on the oil topic, and then we might jump to some Twitter questions if that's all good with you.
Yes, please.
I guess this one's more around like a valuation approach. Like you mentioned towards the start of the episode, you're kind of just sitting there waiting for things to smack you over the head, I guess, in some way.
Yeah.
But how would you think about valuing something as cyclical as an oil company where earnings are up and down all over the place? Are you focusing on like a standardized measure or book value, or what kind of things flow through your mind with?
I mean,
with
I think ideally in like that type of commodity company, you probably like buy on price to book and sell on PE. So wait until you buy when the business isn't working, assuming that that it's a cyclical decline and not a secular decline, and that is not always obvious. So, as a lot of people could attest to buying companies that they thought were just at a temporary dip, and then they never come back. I know no one wants to hear that, even though we've been sort of in a buy the dip mentality for a dozen years plus, but sometimes they don't come back. Yeah. So if you can untangle secular versus cyclical, and you believe you're cyclical, I think buying on a cheap price to book basis can feel like you're not taking undue risk. And then when to sell, more difficult question. But I think, I think you want to imagine what can the earnings look like when things are working in this business, and what would be a reasonable multiple of those earnings, and then not be too greedy about it, and not overstay your welcome if you can help it.
Yeah, that's a really interesting framework. And it seems like, the likes of Buffett, I mean, he's always focused on capital allocation, but it seems like potentially even more important in this type of business where you can do some dumb stuff when the cash really starts to flow in the door, it seems.
Oh, and the history for oil has just been laden with poor cap allocation. I mean, just you almost have to use that as the base case, like that it's going to be poorly allocated, and then work from there. But it's not everyone's found religion right now, and that's going on. But that can turn at any moment, and we can get the Cowboys back out there, and they want to drill, and everything's exciting again, and it's boom times, and everyone in Houston's driving Cadillacs, and
okay, I'm going to write that down on my checklist of when to sell oil stocks.
You know what? Honestly,
in Houston.
It's a joke, but it might not be the worst thing that you might put in as a signpost of froth.
If you enjoyed this clip, check out the full episode here and subscribe here. Thanks for watching.